Hello everyone, my name is Corona-Gonzalez. This is our technology evaluation, and our group, Phoebe, me, Angel, Carlos, Larry, and Logan, and Tyler, will go over electronic payments. So, electronic payments. So, electronic payments basically refers to the transfer of money from one party to another using digital technology, which eliminates the need for physical currencies or checks. So, back in the day, not too far ago, most people just use cash, coins, um, and checks, physical money to, pay for certain goods and services. However, now in the new digital age, almost 80% of payments are through electronics. And the pay methods that people use is basically, there's a variety of methods, which includes debit, credit cards, mobile wallets, online banking, and cryptocurrencies like Bitcoin. So basically, people, even have their credit card on their phones, so like Apple Pay. Anyone use Apple Pay, where you just go on your iPhone, click a couple buttons, and just scan, your card onto the card reader, and it's basically like the same thing, which is pretty crazy. This allows secure transactions, which basically electronic payment systems use encryption and authentication methods to ensure secure and confidential transactions. Basically, with electronic payments, it become much more secure for us to encrypt and authenticate, methods. And then also digital signatures, which digital signatures are often used to verify the authenticity and of the electronic payment transactions. Now, the electronic payments used in business. So there's a lot of different methods that business can use electronic payments, and there's a variety of things. The first off is efficiency. Electronic payments basically streamline financial transaction, reduce paperwork and manual process. So instead of a business having physical receipts, have like just a lot of physical paperwork and manual processes. They have an online instead. They use electronic payments. They use some kind of payment getter like PayPal, Square, or something like that. And these businesses will, put an online platform where you can see all your transactions online instead of having, manual paperwork, and you could just search it easy. And now another way electronic payments are used to business is you could, accept payments from customers worldwide. Um, and this is a really cool thing because if I wanted to buy, some goods from Japan or some goods from even out of state, there's no limit with the electronic payments. It expands worldwide. And then another method is online stores, which is basically e-commerce business rely heavily on electronic payments for online purchases, and it offers various payment methods to the customer. So basically, you can use credit card, debit card, Apple Pay, Google Pay, Samsung Pay. There's just so many different varieties that electronic payments offers for people. And there's also different models, which is like the subscription model, which many business use software as a service company use electronic payments for recurring billing and subscription models. So, for example, it used to be that you send a check every month to a business if you had a subscription. So now you just put in your debit and credit card, and you can have a subscription model go like right ahead, and it uses every month uses your preferred payment method. And it also reduces costs, which it lowers transaction costs compared to traditional methods like checks or wire transfers. Um, I know what certain um, people imagine every time you use like your debit card, at a gas station, they tell you that they want to charge you 35 cents or something like that, which is much more cheaper than what you want to do with a true wire transfer um, or a check transfer or some kind of check. Um, Electronic payments are much more faster. And also the analytics, which is um, electronic payment system, will provide value data for businesses to analyze customer spending patterns and make informed decisions. So with electronic payments, not only can you get more data from your customers, you can use that in a business to find out what customers are more inclined to spend their money on. And so if you're a local business here and, in the high desert or San Bernardino, and you only accept cash, you're only limited to what kind of information or sales you have in your store. But if you went worldwide with your sales and shipped products to people out of state, electronic payments allows you to grow your revenue much more, but also lets you see how much people can benefit from the sales they get from different people around the world, which you could see all your transactions, see all the purchases you're getting, and filter through all this data, which goes back to online platform like Square or PayPal, where you could check all your transactions and see what sales are basically um, more higher. And then another one is risk management. So electronic payment system offers tools to detect and prevent fraudulent transactions. So electronic payment is not 100% right now. There are ways to go around with people have fraud, and and it's just an unfortunate thing, but it's the same with cash checks. People could print out fake money. People could print out fake checks and then just scam people like that. However, with electronic payments, they have been getting more better with that type of stuff. And another, electronic payment used in business is the mobile payment. So businesses can leverage mobile payment apps to accept payments at physical locations and events, enhancing customer convenience. So basically, if, like, for example, if you're at a rave or something like that, and they're selling some T-shirts, you could use your phone to pay for the goods and services that they're selling, which is basically you grabbing your iPhone and just click two buttons, and you have your wallet right then and there for you. So it's a pretty neat little thing that offers lots of convenience. But electronic payments, I think, is great for businesses. Um, I think that it's been much more convenience for me. Obviously, it's great to have cash around you, but just to have your phone and have your phone even pay for all your things, then I think that's one of the best things you could do. So, even though we go into, the business side of it and, the benefits, um, there's actual details that go into what actually goes behind doors. And I just want to show this short clip. It's like a 3-minute clip that shows what exactly happens when you tap your card, insert your card, and where does it go through for, your banks and card issuers, credit card networks and banks like approve all these transactions. So I'll just play this video.
Let's start out by taking a look at the cast of players involved in every transaction. Consumers are issued debit or credit cards, which allow them to access their money or credit lines at numerous ATMs and make purchases at millions of merchant acceptance locations around the globe. The consumer's bank that issued the cards is known as the issuer. The issuer will authorize the transaction and guarantee payment on behalf of the consumer. Merchants who choose to participate in the payments network can take advantage of the large consumer base, along with the fast, safe, and secure transactions provided by the network. The merchant's bank is also known as the acquirer. The acquirer provides access to the network for the merchant by authorizing their transactions and ensuring that the merchant receives payment quickly and securely. And there is a network, or VisaNet, that connects all of the parties involved in order to make electronic payments possible. Every electronic payments transaction can be divided into 3 steps: authorization, clearing, and settlement. Let's see what happens during a typical transaction at a local grocery store. Authorization, the first step in the process, begins at checkout, when the consumer swipes, taps, or inserts a card into the store's point-of-sale terminal. Once the card is read by the point-of-sale device, a digital message containing the details of the transaction, along with the consumer's account information, is sent from the merchant to the acquirer. The acquirer will format the details of the transaction and then send the message to VisaNet. When VisaNet receives the message, it will run the message through a series of risk and fraud prevention tools to ensure that the transaction is valid and secure. The request is then routed to the issuer. When the message is received, the issuer will check the balance on the consumer's account to see if sufficient funds are available to cover the total amount of the transaction. If there is enough money in the account, the issuer will place a hold on these funds and then send the message back to VisaNet. VisaNet will route the approval message to the acquirer. The acquirer receives the details of the transaction and then sends the issuer's approval to the merchant. The merchant can now let the consumer leave with the groceries because the issuer has approved the request and guarantees payment to the merchant for the value of the goods sold. This entire authorization process usually happens in just a matter of seconds. As far as the consumer and merchant are concerned, the transaction is now complete. The consumer has the groceries, and the merchant knows that the acquirer will pay them within the terms of their agreement. But this is just the first step of the transaction process. The next step is called clearing. After the transaction is complete, the acquirer formats the data and transmits the final transaction and cardholder details to VisaNet. VisaNet then sorts all transactions worldwide and transmits a consolidated batch file to each issuer that is participating in the network. Upon receipt of the batch file, the issuer removes the authorization hold from the consumer's account and debits the final transaction amount from their account balance. Once the clearing of the transactions has commenced, the final step of the payment process takes place. This step is known as settlement. During the settlement process, VisaNet consolidates every electronic payment transaction worldwide and sends consolidated net settlement statements to the participating issuers and acquirers. Funds are then transferred between each institution with account activity to settle all transactions that have occurred within a specific processing day. At this point, the process is complete. Payments have become faster and more secure than ever before, providing a foundation for innovation, enabling exciting new ways to pay and be paid. From e-commerce to mobile, person to person, and beyond, electronic payments networks are helping to pave the way to the future.
So that's basically a little video that shows the detailed explanations how electronic payment works. Even though we are just swiping our credit cards and Apple Pays and certain type of payment method we do, this all goes in the background, and it's a pretty convenient way to where us, the consumer who wants to purchase something for a business, is could get our products and service right away, while the banks, issuers, and VisaNet will do everything on the background. But other than that, that was my presentation, and I'll go off to the next person. Thank you.
Okay, so I will be going over the security issues that come with electronic payments. Typically, the issue of security doesn't really fall on the consumer to worry about falling for those types of risks. It more so falls on the companies that are using electronic payments, such as Apple Pay and cryptocurrencies. Many times, a lot of companies will use third-party vendors in order to be able to process these types of payments. The only issue is that sometimes if they don't vet those third-party vendors correctly, or that those third-party vendors themselves could be outsourcing the payments to other vendors. So that means that there could be up to 4 or 5 different vendors that are involved with this very sensitive information. So when it comes to security, companies that are using types of electronic payments have to also look out for the same things that we as people who use the internet all the time try to look out for. This means phishing scams as well as malware, making sure that you're careful on the internet and the links that you click on so that you don't get those types of things on your computer or your cell phone. These are the same things that these companies have to look out for. And unfortunately, according to Proofpoint, 83% of organizations were subject to phishing attacks in 2021 alone. And phishing is a very common and quite easy way for sensitive data to be reached by unwanted parties. So it's very easy for it to happen from both high level and middle managers. They can all be subject to falling for phishing scams. And it obviously happens if 83% of organizations were subject to some sort of phishing scam. So that's something that organizations and businesses have to be very careful that they're not falling for phishing scams. Malware is another thing that that organizations have to be wary of and make sure that they look out for. While many companies have firewalls and protections in order to prevent malware from affecting their systems, it can be accessed it can still be accessed through mobile phones and personal computers and things like that. So if someone is working from home or checking an email really quick on their phone or computer, they might accidentally introduce some type of malware into the company system unknowingly. So that's something that workers have to be careful of when dealing with this type of sensitive information that comes with electronic payments. So what is the future for electronic payments? Give me 1 sec. Okay, so again, so let's just go over really quickly what are the most common risks when it comes to electronic payments. That's going to be third-party agencies just not being vetted correctly by the principal company that is using electronic payments as a form of payment, phishing scams that middle managers or high-level managers within the company can fall for, and malware. Similar to everyday use of electronic devices that we use on the internet, it's the same risks that companies are at when dealing with consumers' sensitive information. So it's up to the company to be very careful of the data that they hold. And it has happened before where sensitive data has been accessed by unwanted parties in the past. So it happens, and companies just have to be very careful about not falling for those types of things. So the future for digital payments. It's definitely going to expand into new markets. Currently, Discover, the credit card company, is looking at working and embedding payment platforms into vehicles. So their goal is to be able to make transactions at parking lots or parking meters to be a lot easier. I don't know exactly what that looks like, but Discover is currently looking into adding some sort of electronic payments into vehicles in the future. So it's definitely expanding into new markets that we probably can't think of right now, but big companies, finance companies are looking at different places where they can incorporate electronic payments. The aim is just to make it more convenient, because most people already find these types of payments to be very, very convenient and easy to use. So it's just about expanding it to different fields in the market. So it's very unlikely to become obsolete. Electronic payments have increasingly become way more popular among consumers. Most people only carry around a credit card in their wallet, if they even carry around a wallet anymore. Most people have Apple Pay that they just pull out their phone and conveniently pay for whatever it is that they're going to pay for. So this is definitely a type of technology that is very unlikely to become obsolete, and it's only growing in popularity amongst consumers, and it's just looking to be expanded into different markets in the future. So it's definitely a growing field, and it's just something that we're going to be seeing a lot more of in different areas of our lives. Not only is it moving into vehicles, but Discover has also talked about incorporating into the home in some way. I'm assuming probably into smart refrigerators. There's going to be a way where you can purchase something straight on the smart refrigerator and make a purchase in that moment, where you don't have to go pull out a wallet or look at your credit card info. You can simply just make a purchase in that way. So this is so digital payments are just going to expand and expand and expand, and I think we're just going to be seeing them everywhere in the future. They might even look different in the future. It just depends on how it's going to be innovated on in the future, but it's definitely growing, and it's not getting any smaller, and it's simply growing in popularity. So the future is bright and exciting for it, but that is basically my part. Thank you.
With the growth and development in the field of electronic payments, one question that has arisen is if there are any industry-specific applications or trends related to this technology. Some applications in this field include the use of mobile payments, cashless payments, and blockchain technology. To start, a mobile payment is a money payment made for a product or service through a portable electronic device, such as a tablet or cell phone. This is a major application of electronic payments, as the use of cell phones and other portable devices is very prevalent in today's society, and the use of these devices is one vector in which electronic payments can be conducted. While some may argue that electronic payments are insecure and are prone to security breaches, they carry the same vulnerabilities as credit card payments, which are regarded as secure payments. Also, this form of electronic payments can be considered more secure than cash, as it can be PIN protected, as well as there is less of a threat of losing login information relative to losing physical cash. The main benefits that arise from using mobile payments is that they are more convenient than carrying physical cards, as well as they are faster than traditional payment methods. In the same category as mobile payments, cashless payments are also another industry-specific application of electronic payments. While they are similar to mobile payments, cashless payments can be tied to any wearable or carryable device, as well as can be used in the form of digital credit cards. The security of mobile and cashless payment forms are included in the way the payments are conducted. In a physical transaction, contactless systems use near-field communication, otherwise known as NFC technology, to interact with the customer's card when it's held close to the payment reader device. In short, NFC transfers information in a similar fashion to Wi-Fi or Bluetooth. NFC can be regarded as secure because of the fact that it encrypts the information as well as uses two-factor authentication. Encrypting the data to make sure it cannot be read while the data is traveling from the customer to the business, and two-factor authentication eliminates the possibility of stolen identity or information being used to make purchases. Both the encryption of data and two-factor authentication are security methods that the transfer method NFC uses in order to secure the customer's information. In terms of digital credit cards for online purchases, many credit card companies will create a temporary credit card with different information to use for a single purchase, but will not be usable after the purchase, as the information is not the correct information tied to the customer's credit card. In short, it is another security measure put in place to avoid information theft. And next is the integration of blockchain technology and smart contracts marks a transformative trend in electronic payments. Blockchain, a decentralized ledger, ensures secure and transparent transactions, particularly in the realm of cryptocurrencies like Bitcoin and Ethereum. Smart contracts, self-executing agreements encoded in blockchain, bring automation to payment processes, streamlining transactions in various industries. In finance, blockchain reduces reliance on intermediaries, cutting costs and processing times. In supply chain management, it enhances transparency and automates payment triggers at different stages. Real estate transactions benefit from automated ownership transfers, and healthcare transactions gain efficiency and security. While challenges like scalability and regulatory considerations exist, the potential of blockchain and smart contracts to revolutionize how payments are executed across diverse sectors remains a driving force in the evolution of electronic transactions. And while these are a few demonstrations of important industry-specific applications to electronic payments, another question that has been posed is if there are any potential legal or intellectual property issues associated with the use of electronic payments. Potential issues include security and privacy laws, fraud and cybersecurity, and consumer protection. To start with security and privacy laws, electronic payments involve the transmission and storage of sensitive financial information. Compliance with data protection and privacy laws, such as the General Data Regulation Protection in Europe or various state laws in the United States, is crucial to safeguard customer information. And with fraud and cybersecurity, the digital nature of electronic payments makes them susceptible to fraud and cyber attacks. Ensuring robust cybersecurity measures and promptly addressing any breaches is essential, and legal ramifications may arise if customer data is compromised. And lastly, with consumer protection, laws protecting consumers in electronic transactions vary globally, and providing transparent information, fair terms and conditions, and addressing issues like unauthorized transactions are essential to comply with the consumer protection laws. And navigating these legal considerations requires a comprehensive understanding of the regulatory landscape and a commitment to ethical business practices. As the electronic payment ecosystem continues to evolve, staying abreast of legal developments is crucial for businesses operating in this space. And the increase in electronic payments has led to new and convenient ways of paying, like mobile and cashless options, making transactions more secure. However, businesses need to pay close attention to the legal rules. They must follow data protection laws, ensuring customer information is handled properly. Cybersecurity measures are crucial to protect against online threats. Additionally, businesses need to be clear and fair with customers, preventing unauthorized transactions and building trust. In short, while electronic payments bring benefits, business must also be careful to follow the rules to protect customer information.
But I'm going to go ahead and talk to you guys about the business benefits of electronic payments. So with electronic payments, it actually improves the efficiency of a business. It does so because it saves time that employees are with customers, and it saves how much time they actually spend processing a payment. If the actual transaction is a little bit faster, being that it's electronically, customers can then, or employees can then move forward and help the next customer and provide better customer service in doing electronic payments. Also, it saves labor and time. Same thing. So if the process is a little bit faster electronically, it'll save the actual employee more time, and there'll be it's less of a process time when they're processing a check or cash and having to give coins back, things of that nature, than it would be for just to process an electronic payment. Also, with that, it helps lower the risk of theft. It helps employees at the end of the night when they're doing their cash handling. There's less of a chance to think that money could go missing or get stolen. Checks can go missing, things of that nature. If most of it or all of it is done electronically, it lowers the chance that the money goes missing. Another benefit for electronic payments is that it improves data entry. So this is really good when it comes to tax purposes, things of that nature. If everything is recorded digitally and electronically, then also there's less of a chance that numbers get entered incorrectly and things of that nature. It helps customers or employees. I'm sorry. It helps businesses know where they're sending out where they're standing at with sales, um, you know, up to date, things of that nature. And when it comes to the IRS and filing for tax reasons, the numbers would be a little bit easier to follow because there's a paper trail as opposed to when there's cash. The IRS has more of a chance to when there's more cash involved, the IRS there's a better chance that they're going to want to audit things of that nature. So this helps lower the cost of the risk of that. Um, Electronic payments streamline transactions and have considerable business benefits. So it's something payments do have a lot of benefits. Now we'll move on to business costs. Excuse me. So of course, there's some costs to processing electronic payments. For one, there may be some minor training that will have to be done with the employees just to get them up to speed and to show them how to process an electronic payment. But they're pretty straightforward. They're processed just like a regular transaction, a card transaction for the most part. So it's not a big learning curve. So not a big cost there. Also, minor hardware and software improvements may be needed. Just depends on what kind of point of sale system is being used, but most modern point of sale systems can support electronic payments with compatible card readers. Just like on the next bullet here, most of these different forms of payment of electronic payments like Apple Pay, Google Pay, Samsung Pay, they're pretty easy to set up, and they're mostly just the customer, is in charge of processing that payment. But they're pretty straightforward, and they just actually use the actual card just digitally. So it just depends on what kind of hardware that is being used. So depends on the system that's being used with the actual point of sale. But little, if maybe not any improvements have to be done. I would say this is more of a bigger expense for a smaller business when they do have an outdated POS system, because then it would come with some major improvements, and that can get kind of expensive. But for bigger corporations or bigger businesses, for the most part, the modern POS systems that are being used today already support these kinds of electronic payments. So with the next one, what I was talking about with Apple Pay, Google Pay, and Samsung Pay, they're actually free for the merchants. They don't charge anything for merchants to be able to process electronic payments. They're pretty business friendly, and the only thing is they may still be subject to fees. Customers or businesses may still be subject to their fees from their banks or payment processors. But besides that, it's not too costly to support electronic payments. And with that, yeah, modern customers demand modern payment solutions. But yeah, that's some of the costs that are included with being able to process electronic payments.
With online payments, there comes a lot of ethical issues between skimmers being able to get payment just from walking past you and rubbing your phone to the data leaks. However, the most ethical problems occur with online payments such as cryptocurrency. Cryptocurrency is still in its infancy stage, so it is a new territory. Therefore, it's not as regulated as all other forms of currency. This leaves it very volatile to frauds and scams. Also, it leaves for the perfect use in black market sites. All of these are unethical to the consumer, and there's also not as much backlash on the scammer and fraudster other than public backlash. So the frauds, our biggest or the most notorious fraudster is a guy called Sam Bankman-Fried. He was known as the first crypto billionaire and one of the youngest billionaires to date. He was the CEO of two different companies, FTX, the International Cryptocurrency Exchange, and Alameda Research, a cryptocurrency hedge fund. He's now been charged with 2 counts of wire fraud, 1 count of conspiracy to commit money laundering, conspiracy to commit commodities fraud, conspiracy to commit securities fraud, and conspiracy to defraud the United States and commit campaign violations. What Bankman-Fried did is he would convert the cryptocurrencies, and between his two companies, he would just send them back and forth to each other. And with this, he fooled investors and lenders, showing that they had more profit than what was actually being made. And he was also using these funds for his personal use, and he used for financing political figures that were advocating for cryptocurrency. And with the two companies and co-conspirators, he was able to evade contribution limits and reporting requirements for these campaigns. And all of this flew under the radar due to the use of the cryptocurrency and its lenient regulations. And it only came to light because when the business failed, it had to file for bankruptcy. Crypto scams, they've been a thing since the beginning of crypto. The main scam that has brought light into it and a lot of heat to the scene is the use of online celebrities known as influencers. Many crypto coins, they'll go to these influencers and ask them to promote a certain coin. And the influencer will then promote it as a get rich scheme, or you'll buy this coin and it'll be the new age, the future of it. The fans, they'll then buy in because they have a parasocial relationship to these influencers and they think that they're trustworthy. And then after the fans, they buy in, the coin creators will either take all the money out of it or sell all their shares in that coin. And this is known as a rug pull. After the rug pull, it then leads the creators of the coin, the scammers, to leave with all the money that the fans put in, and the fans will lose all their money out of it. Scam has been done time and time again through influencers like Logan Paul, Aiden Ross, Speed, and FaZe Clan, all of which they tend to have a more younger and impressionable audience. And this scam has become very prevalent in the new age of online payments, and it is only due to the rise of cryptocurrency. The last ethical issue that comes is their use in unregulated sites. With the emergence of crypto, it's been brought in with open arms as the main form of payment in the black market. If you've ever seen the movie Dope, it explains how a teenager was able to create a black market site to sell drugs and create a drugstore using the cryptocurrency as their payment. And they were flying under the radar of all law enforcement. And then another industry that is brought in with open arms is unregulated online gambling sites. These sites, they'll set their headquarters to a country with less regulation in gambling, and then use the less regulation in cryptocurrency as their payments. This leads to no regulations in their gambling sites, and what ends up happening is it just encourages and feeds into the gambling addiction and sucks more and more money out of gambling addicts. And all of this is because of the cryptocurrency. There's no regulations to be put onto these sites. All in all, online payments and the emergence of cryptocurrency, it has led to many ethical issues. And law enforcement is finally starting to take a look more into these frauds and scams. And soon there will be more regulations with a case like Sam Bankman-Fried. It'll set more precedents and lead in more to that legality of it. But for now, we just need to look into these sites, be safe, and just look where you're pouring your money into.
All right. Hi, everybody. I'll be discussing how electronic payments change the business. So for those who don't know, we're going to start all the way back. Let's go back in time to, ancient times. There was the barter system. So basically what that was people would exchange goods for other goods and or services, like here I'd give you, a few, pieces of bread for maybe a pig or something. And over time, that kind of evolved. So I went from trading, objects and maybe services, to eventually monetary currency or exchange. So eventually, instead of just trading, objects such as wheat for, like a pig or some bread or whatever, we now have a form of like currency. So it went from bread to now like gold coins or silver coins, and they would exchange that for goods and services. Um, Eventually it evolved into the dollar bill, something that's made out of cotton and paper, something a little more less like more sophisticated, I guess you could say, for currency. um we did have something though known as the gold standard. For those of you who don't know, that's when you could exchange, basically you could exchange like your actual money for certain like sets of gold. So if you had like $100 worth of, like, I guess gold, or $100 worth of like money, I guess you could exchange it for $100 worth of gold, if that even makes sense. Yeah, it's basically the goal is, well, I guess it's the currency is to be freely converted into fixed amounts of like gold or whatnot. But yeah, eventually that was removed, I believe, in the 60s. So which leads me to my next point of fake money. So think of it this way. I say fake money just because nowadays we have things like Apple Pay and Samsung Pay, Google Pay, all that other stuff, Apple Cash, um, things like that. I'd say fake money because it's invisible. You can't actually see it, but you have it and it has value, but can't actually like hold it unless you go to the bank. And even if you do go to the bank, for example, if let's say you had like $10 million in the bank, right? You would go to the bank and be like, hey, I want to take out my $10 million. Well, they physically don't have $10 million of cash to give you. They would have to create it in order to give to you, and they'd have to set up a schedule and everything. So that's why I say fake money, because it's not, you can't actually see it, you know. Um, but that's so. Let me just reiterate a couple things real quick. So we went from trading objects, and services, to having some sort of monetary currency, that we would exchange. And now in today's world or standard, I guess, we have invisible money that we trade. Another example of that would also be like Bitcoin and those cryptocurrency, stuff like that is still figuring it, people are still figuring it out and whatnot. So that's just one of the things that fake money kind of comes into that part. But yeah, so how electronic payments have changed the industry? Well, it's allowed for a lot of businesses to have quicker transactions. So instead of people having to pull out their bills or whatever, pull out their card that's in their you know all stuffed in their wallet or in their purse or whatever, they can just pull out their phone or their watch and just scan it on the system, and boom, you're done. That's it. Quick and easy. So yeah, it's a lot of businesses to have quicker transactions, to may allow for faster service for people to be in and out. It's also allowed to have it's allowed businesses to have like less clutter too, especially where I work. It's allowed less clutter. Other than that, I mean, it's kind of a little trade-off though. For some businesses, they did have to probably pay for the system and whatnot. But at the same time, it allowed them to potentially make more money in the long run. But yeah, that's one of the few ways that the electronic payments have changed the industry. You'll see it a lot more often now, and it's probably going to be the new standard. But
My name is Logan Rios. I'm part of Group 6. I'll be talking about how electronic payments affect the customer experience and the potential challenges that electronic payments can bring to challenges can bring to businesses. So the first thing I'll be talking about here is the convenience. So faster transactions, as well as online shopping. So electronic payments such as debit, credit cards, mobile wallets, and contactless payments enable a quick and efficient transactions, reducing wait times for customers. So that helps the customer experience. Online shopping platforms and payment systems have revolutionized the way people shop, providing the convenience of making purchases from anywhere at any time. Obviously, this helps, like in the situation for COVID, if you need to like order groceries or order something, you need online, you don't have to go to the store. Security. So can help protect against fraud protection as well as keep your transaction history private. So many electronic payment systems incorporate advanced security measures such as encryption and two-factor authentication to protect customer financial information and reduce the risk of fraud. Customers can easily track and monitor their transactions through digital banking apps, enhancing their control over financial activities. Next, flexibility. So there's multiple options. So you have, the Google Pay, Apple Pay, the Samsung Wallet, whatever that's called. There's also global transactions, makes it a lot easier to facilitate international transactions, allowing customers to make purchases or transfer money globally without limitations associated with traditional methods, payment methods. That is, customers have a variety of electronic payment options, including credit cards, debit cards, mobile payments, and online transfers. This flexibility allows them to choose the method that best suits them. So obviously, if someone has an iPhone, it's a lot easier when they use Apple Pay than anything else. The reduced friction eliminates physical currency, which can be a plus and a minus, I suppose. And one-click purchases are much easier for customers as well. Electronic payments reduce the need for physical cash, streamlining transactions and eliminating the inconvenience of carrying and handling cash. Online or one-click purchases, that is, stored payment information and one-click purchase options simplify the checkout process for online shopping, reducing friction and enhancing the overall user experience, which is all it's about, right? So the user experience is better than your business is going to be better. Accessibility. So we have 24/7 availability as well as financial inclusion. So you can't pull out cash 24/7, obviously. So electronic payment systems operate around the clock, providing customers with the ability to make transactions at any time, even outside traditional business hours. Financial inclusion. Electronic payments can improve financial inclusion because they provide access to banking services for those who, may not have as easy of access to traditional banking infrastructure. Next, we have innovative technologies. So we have things like contactless payments as well as cryptocurrencies. I already mentioned contactless payments a little bit ago. So the rise of contactless payments methods, such as NFC-enabled cards and mobile wallets, has further improved the speed and convenience of transactions. The emergence of cryptocurrencies introduces new possibilities for secure and decentralized transactions. Although this adoption is still pretty early in its stations, not everybody uses that, obviously. So potential challenges that we may have that would bring, harm to businesses. We have security concerns, so data breaches and fraud risks. I put a picture here of, a skimmer which would get the information from you. So as electronic transactions involve the exchange of sensitive customer information, businesses face the constant threat of data breaches. Cybersecurity measures must be robust to protect against unauthorized access and data theft. Fraud risks, the digital nature of electronic payments makes them susceptible to many forms of fraud. So, you have skimmers, and then you have the things that scan Like you don't even have to, you can just get near the card and it, gets the information. So customer resistance as well. So, a picture of and cash. So like some people will only use cash, and that only well, that hurts if your business completely relied upon electronic payments, then it detriments your ability to help those customers, and then those customers, you're going to lose that. That is an opportunity cost, right? So if you have electronic payments only, then you're only going to you're going to lose the customers who only pay with cash, and then those people when they pay with cash who don't have electronic payment options are also going to lose out on the ability to purchase from businesses that only deal with that, right? Next, we have infrastructure challenges. So internet accessibility and power outages. If you're in an area that faces, or not faces, but has a bad Wi-Fi connection, or the signal is just not good at that time, then it's going to be difficult to make those transactions, right? Power outages as well. I mean, if there's no power, how are you going to, get those transactions to go through? Which is an advantage of cash in that situation, obviously. Next, cost considerations. So you have to really consider the implementation costs as well as the transaction fees. Upgrading or integrating electronic payment systems can be expensive. Businesses must weigh the initial cost against the long-term benefits and carefully plan their budgets. While electronic payments offer convenience, some payment methods must involve transaction fees. Businesses need to consider these costs and determine how they overall profitability. So sometimes the business will charge you to use your card rather than just using cash, because they have to make that money back from the cost of implementing that. They have to make up for that. So for you being able to do that, they have a little bit extra, not much, of course. Consideration. I thought I just did that. Did I not just do that? Two cost considerations. Okay. Okay, so I messed up. I was supposed to do a different slide, but I'll just talk about it anyways. So that was system outages. So electronic payments may experience occasional downtime due to technical issues, maintenance, or other unforeseen circumstances. So businesses need contingency plans to minimize the impact of such outages. So that they can't just be reliant on electronic payments, because then power outages, or when the Wi-Fi is down, without having those signals and being able to communicate with people's banks and things like that, cash is going to be the only option you have, right? So thank you. And that was my part of this project.